I think we're going to go through something like this. So if we were to look at this chart, this is back in 2007. We saw the stock market peaked, gold put in a peak, and then it went into this multi-wave correction where gold pulled back 34%. And so I believe we're kind of like right here in gold. I believe we've got like one more push up, a couple more of these monthly bars push to the upside, and then I think we're going to have this big pullback. And that'll be the financial reset. There'll be all kinds of stuff happening after it puts in a bottom. That is when we go into the big multi-year phase of a rally for gold. I believe this is when the miners will come to life. This is when the miners really, I think gold's going to end up having a very nice move here to the upside. I can share my screen and just kind of show you what the chart of gold is pointing to. So this is the daily chart of gold. It's had a series of bull flag patterns. So it has a big run up and then it pauses for a while, which is what you want. It has a big run up, then it pauses. We've had a nice run up and now it's pausing. So it's stair stepping its way up. This is a controlled, more so a controlled move. You don't want really something that just goes parabolic straight up. Even though you could argue when you zoom out on this chart, it is a fairly parabolic move. But after this, if we were to use a Fibonacci extension, which is one of the most powerful technical tools I think you can use for charting, it will give us an idea of where the next upside targets are. And so we can just base it off the rally. So from the low over here to the high and back down. And this will tell us where kind of sentiment and momentum, kind of where the universe is going to more or less pull gold eventually. It is going to want to see gold up to about 400, 4,700 somewhere, which is about a 14-15% move. And then it's going to want to go all the way up around 26% move to about 51, $5,200 per ounce. So that would be the next move. And I think if the market is where I think it is over the next 2 or 3 months, I think we could see gold surge up to this level. I also think the stock market could have a very sharp sell-off going forward. So I think, as you just mentioned, I think there's going to be some rotation of capital. I think the stock market might start to sell off. And as money comes out of equities, it's gonna look for a safe haven, somewhere to go that's working, and it'll be precious metals. And so that money is going to come out of stocks and just pile into the precious metals space. And as we know, the stock market is much bigger than the gold market. So when you've got trillions of dollars coming out of the stock market very easily, which is nothing, that's going to pile into the gold market and just skyrocket, shoot higher because it's a ton of money for the gold space to kind of handle. So I think we could see a very strong, if I was to look at the chart, we could potentially see like some crazy parabolic move up into this $5,200 level over the next month or three. So that would be like the perfect storm. To me, that would be the signature of precious metals are about to put in a top, including silver and platinum and palladium, and also that the stock market has already put in a top, and that we're about to start something much bigger and uglier. I think both of these are going to require some piece of news. I think we're waiting for some economic data or something that's going to trigger more selling in the stock market. It could be in the US, it could be jobs data, it could be unemployment, something like that, that comes out that, finally creates a big downdraft in equities. And of course, that will create fear, and money, when it's fearful, naturally wants to kind of move to gold. So we'll just have to see. We'll have to see what is going to cause that tipping point and when is it going to happen. I think it could happen in 1 to 3 months, but overall, yeah, I mean, this could drag out for a long time. I mean, I thought this, 3 months ago as well. So I thought this parabolic move that we were going, I thought it was going to actually continue to shoot and just go absolutely straight up. But now we're getting another step and a pause. So again, you just have to really follow the markets. Try not to pick tops or bottoms. Just understand you have to follow trends and let them mature and unfold versus trying to bend them to your will, right? A lot of people, successful traders, wait. You have to be patient. You have to let the trade unfold. You have to let it happen and come to you. You can't just do a trade because you want returns, right? That is the biggest two characteristic difference between a trader who's constantly hunting for trades and losing money versus someone who actually waits for charts to unfold and then moves into that position at the right time, lets it play out, then moves out. It's a very different game. The way I trade and invest, it feels pretty darn slow and boring. but it works exceptionally well versus, people who want to trade a lot and get that rush and that satisfaction of trying to have wins and gains, big gains, but have a whole bunch of positions. So you got to let this gold trade more or less play out, and it could take several more months still. I mean, I look at waves in the market. Usually there's about 5 to 12 cycles or waves that roll through the stock market every year. So, you know, for the precious metal space in the equities market, I feel like we're kind of at this last little push. I think, over the next 3 to 6 months, we're going to see probably the gold market and precious metals top out. We're probably also going to see the equities market top out. I think there's going to be a lot of volatility, a lot of big sideways and huge range of the market, kind of both markets kind of trying to figure out what they're going to do. So, I mean, if I had to look forward, 2, 3 years from now, I think we probably see the stock market sharply lower or potentially still where it is, but it's probably have had a huge sell-off along the way. I think precious metals over the next 6, 12 months are going to be lower than where they are right now. I think, or maybe potentially where they are right now, but they'll have already rallied up and come back down. So we're in this mixed market. I mean, it's hard to give a forecast, right? I think it really depends on your horizon. And I don't look too far out in the horizon. I don't like long-term forecasting, like for pricing, because I do think gold will be sharply higher, stocks will be higher. If you look far enough forward, they're all going to be higher. Um, but I think it's more so narrowing the shorter term price action, as you just mentioned, not the daily moves, but more or less each year there's going to be certain waves that roll through this market, and I like to try and catch those waves. So I usually only look forward like 1 or 3 months because that's what my time horizon is for the markets. I ride one wave at a time, manage each one individually.
Healthy markets breathe. After powerful rallies, consolidation is not a warning, it is reinforcement. When gold moves upward, then narrows into a stable band, it forms the foundation for the next leg, much like engineered support after a surge. The common retail instinct is to fear sideways action. Veteran investors love it because stability at height builds strength, liquidity, and long positioning resolve. Zoom out, and you'll see gold has entered a long, multi-year repricing phase driven by inflation, uncertainty, and sovereign debt risk. Unlike speculative assets with finite cycles, precious metals carry stored demand waiting patiently beneath price. Consolidation is not weakness. It is synchronization, accumulation, and preparation for expansion.
And Chris, if possible, if we could look at the silver chart as well and look at it from the technical perspective as well, because there's this big cup and handle that's here from the 1980s. Are you paying attention to that as well?
It's too big of a chart pattern. I mean, a lot of people talk about it. Let's just go way back here. I'm not a fan. I mean, usually my take is people who see this as a giant cup and handle, I mean, they're just way too bullish, too much of a silver bug. I think you got to take, for this cup and handle pattern, I don't know. It just doesn't feel right to me. It doesn't feel like a clean cup and handle. You can turn most charts into, you put a bias as you want. Like this cup and handles, obviously here's the cup, and then you've got this huge handle right through here. And now we're trying to break through these, but I don't look at it that way. Like I'm not going to base something on a 45-year pattern. I'll be dead by the time the whole pattern plays out. I'd much rather focus on the shorter term charts and play the moves. Now, I do think silver could rally to like 61, 71, potentially actually blow off into the 80s, $80 per ounce over the next 1 to 3 months. I think it has this potential to go parabolic, but I never have factored in this cup and handle pattern. If you want to be really bullish, which is generally whoever's looking at this for silver, that could give you this pattern could give you a $150 to $200 silver, which is what everybody wants to hear, which is why a lot of people talk about this giant cup and handle pattern, I think, is because it can give you these giant upside targets. And I just kind of focus on one bull market at a time, because if you just look at this chart and you were to go to a fifth grader, anyone, you go, what happens after a spike, right? What's going to happen next? And everybody will say almost the exact same thing. They'll be like, oh, it goes straight back down. Except for if you're in love with the commodity, you're going to be like, no, no, this is going to 200. So, it all comes down to a bias. Like I strip the bias out. I don't really love I only like or love an investment when it's working for me and when it's moving up. And I could care less if I own it. If it starts to go down, I just get rid of it. And I only like what is in favor at the given time, right? So,
Mhm. And
I think we could see silver have a very big move still. I think it could go up to the 60s, 70s, maybe go up into the 80s, but I wouldn't be factoring this cup and handle pattern. It just blindsides you. It makes you think there's so much upside that you're going to ride out, you're going to ride out 10, 15-year cycles to the downside where you lose 70, 80% of your value. And I don't believe in that kind of volatility for a portfolio.
When analysts deploy extension projections, they are not predicting perfection. They are mapping magnet zones for capital. Applying proportional momentum measurements to recent cycles implies upside gravity around mid-4,000 price regions, representing a double-digit percentage climb from present levels. That's not arbitrary. That's characteristic behavior when sentiment focuses on depreciation hedging rather than valuation compression. In recent years, investors have quietly shifted from growth-only logic to wealth preservation logic. This reflects a new era where metals trade as directional indicators of currency vulnerability. Every forecast will miss an exact number. Few forecasts miss the direction when the core premise is monetary dilution, amplified risk, compressed supply, and dip-supported demand dynamics.
The large caps have done really well. They've obviously broken to some highs. They're starting to show a little bit of signs of volatility. Um, I mean, they're definitely a very strong move. It became a very crowded trade a few months ago, as I mentioned earlier. Everyone kind of piled in at the same time. I think gold miners are going to still move higher with the rest, like with the rest of the precious metal space over the next 1 to 3 months. But I do believe they will come back down very sharply when we go into a financial reset. If we look at like the gold miner juniors, you can see they're not breaking out to all-time highs. They've had a very nice run. They're really stuck at a resistance zone through here, very significant lows and highs. And so again, I think we're going to see the miners probably have one more push, one more parabolic push, maybe, into this next critical pivot level somewhere around here. So there's still quite a bit of upside in gold, silver, and miners. I think we could see like 20, 30% upside in gold. I think we could see 50+% upside in silver. If we were to look at junior miners, there's potential for, 40% move or so. So, we're in this kind of a little bit of a bubble phase where things are going, parabolic in terms of the long-term charts. And when things go straight up, they come straight back down. You can see the silver miners, it's the same type of thing. The question is this the top? Have we already seen it? Or is it going to have one more big push? And right now, the charts are still pointing to we're going to have one more push higher. But after that, you better be ready to pull the chute and lock in gains and then let the commodities, let the air out of the bag a bit and buy them back, hopefully at a lower price. Or at least buy them at the same price a few years from now after they've built this big bull flag pattern and they're ready for another breakout. And you buy it on the next breakout. Because a lot of times commodities will go dormant for 3, 4, 5 years. And why hold them if you could just move to something else where you could make money for 3, 4, or 5 years and then just get back into the precious metal space when it's good again? And that's what I do. It's like just hold stuff that's working and get rid of what's not. And right now the precious metal space is working, and I hope we have one more big blast higher. That's my hope, and the charts are still favoring that, although they have some signs of like maybe it has put in a top. But underlying, I still think there's one more push left in this market based on sentiment and where investors kind of fear and greed levels are at right now.
The gold market is small relative to global equities. When an equity peak forms, capital hunts shelter. That's not theory. Markets demonstrate this in every major liquidity reversal. If even a fraction of institutional equity outflows redirect into metals, the price impact is massive. A wave of safety-driven inflows can push markets rapidly upward because the destination pool is compact. This is where gold differs from stocks. It absorbs fear flows like a reservoir receiving a flood. And that flood doesn't need permission or precedent. With national debt at record highs and global fiscal expansion accelerating, Investors increasingly expect real assets to serve as the beneficiary of equity rotation waves, safe haven migration, and inflation-driven capital shifts.
No, you make a good sense, and that's what I'm waiting for. I believe we're going to see the precious metal space push up one more move, and then there's going to be a big reset, and we're going to see all of these pull back very, very sharply back down to where they are lower, potentially over the next year or so. After this next financial reset, when we have it, that's the one where I think the junior miners are gonna do the best. So like if we were to just kind of go back to, let's just go back to the gold chart for a minute, and we'll just go to, um, whoops, what did I click here? Let's go back to the monthly chart. I think we're going to go through something like this. So if we were to look at this chart, this is back in 2007. We saw the stock market peaked, gold put in a peak, and then it went into this multi-wave correction where gold pulled back 34%. And so I believe we're kind of like right here in gold. I believe we've got like one more push up, a couple more of these monthly bars push to the upside, and then I think we're going to have this big pullback. And that'll be the financial reset. There'll be all kinds of stuff happening. After it puts in a bottom, that is when we go into the big multi-year phase of a rally for gold. I believe this is when the miners will come to life. This is when the miners really came to life last time. It was after the correction, the juniors, the micros, all just went absolutely ballistic for many years. So if I was to just go back onto this chart of show you where I think we are right now, I think we're going to see gold rally up. Let me grab a pencil here. And then we're going to see it go into a multi-month pullback. And then somewhere over here, after it's blown up, it's gone and hit these upward targets and pulled back. I think this is when you get invested back in the juniors and the mining stocks. And that's when gold, I think, is going to have the next really big push that lasts a long time, where we see, that maybe the US dollar actually does collapse after we have this next reset. And gold becomes, the ultimate kind of reserve currency, or the ultimate safe haven from currency collapse. And that's where gold could go to 5,000, 12,000. Who knows after that? And that's when you want to get involved, I think, in the juniors. That's when they come to life, in my opinion.
That's very interesting, Chris. Would you be interested in things like copper, uranium in the commodity sector right now?
Not right now. I think after a financial reset, to me, everything feels very frothy. Everything feels overvalued. I feel like there's a ton of risk everywhere, that everything could collapse at any given time. We're just kind of waiting for that piece of news or the event to trigger it. So I feel like uranium is a crowded space. Precious metals is on its last push. Copper, I'm not, I will like them when I think everything's been reevaluated. Like we've got some reset in asset classes, meaning a big reset in prices across the board. And then I'm going to love it. I've been excited to get into uranium for a long time. I think it's going to be a very big opportunity. I think robotics is going to become a very big thing. I think it's going to really take off. It's going to be one of the next, I think AI obviously is huge, but then it's going to come more into robotics as well. It's going to be some huge game changers over the next 3 to 5 years. And I think that it's going to be a sector or a pocket that's going to come to life.
At major market extremes, psychology turns emotional. Gains compress into short bursts, followed historically by deep reevaluation periods. This creates mirror drop behavior across metals, miners, and leveraged risk proxies. When sentiment spikes form, traders know danger isn't the rally. It's lingering too long after it matures. Unlike equities proxies bound by sectors and ETF benchmarks, physical metals cannot disappear through confiscation or delisting, making them directional anchors. Mining equities may amplify gains, but juniors' lag signals show resistance zones not yet cleared. In market resets, everything reprices, metals dip, miners correct harder, but recovery leadership often emerges from the junior mining sector once valuations clean, liquidity stabilizes, and trends resume upward.
I think oil is going to end up having a fairly big reset in price. If we just kind of look at the price action, oil right now is trying to hold on to this 55, 56 dollar per barrel level. If it breaks that, I think we're going down to the mid 40s, and we could even flush down into the 30s. I think it's going to see a very big unwinding. And again, this is to me, like, oil's been going down for a long time. I think this is telling us the economy's slowly weakening, things are getting worse. And I think a lot of things are going to hinge around a piece of news that's going to create a drop in oil, a breakdown. It's going to create a breakdown in stock pricing. People are going to always say blame it on the news, but the charts have, everybody always labels it. They're like, oh, the Fed caused that move and they caused this or this, they always put a label on it. But the reality is the charts are already telling us a big event is coming. It's already pricing it in. The trend is already down. The trend is more likely to continue than it is to reverse. So the trend is down, meaning it's already telling us it's going lower. Um, and so the charts kind of tell us all this stuff. And then usually there's a piece of news that helps kind of push it over the threshold and create that tipping point for a new massive trend change. So I think oil is going to be down in the 40s pretty soon. And it's going to there'll be some news that helps kind of make it break those lows. I would think it could be jobs number in January or like unemployment, something like that. I'm not sure, but I'm pretty bearish on the energy space. And if we look at natural gas, which I don't follow natural gas too much anymore, it has these like massive cycles every few years, every 4 years, if it's going to load here. I don't have the data set to go back that far, but overall, natural gas, I steer clear of it. It's very volatile. It likes to have big spikes and fizzles out very quickly. Usually winter is a strong season for natural gas. As we go into the winter, the cold months, we tend to see it pick up. But I do think we're going to see oil move lower. That's the clear kind of play.
Successful traders don't master prediction. They master patience, pattern maturity, and staged risk management. They move only when conditions align, positioning early, exiting late, and avoiding impulse noise. Today's markets cycle faster. On average, tradable waves repeat multiple times per year, offering discrete directional opportunities for metals and mining equities alike. The biggest dividing line is mindset. Frequent action seekers often lose. Pattern waiters often win. Gold's current trend may still be unfolding, requiring time for momentum resolution. After a reset or prolonged consolidation, traders look to re-enter quality miners, particularly juniors, where recovery leverage historically delivers the strongest expansion cycles. Direction matters more than drama. Timing matters more than narrative.